Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, April 11th, 2020. This is a weekly market update. I wanted to start off with a quote from John Maynard Keynes, very famous economist. Now, of course, the fact that I even mentioned Keynes means I'm going to get a certain amount of comments and ankle biters writing to me about Austrian economics and why am I listening to what Keynes says? Look, the quote is what I'm going for. Just because you don't agree with somebody's politics or their background or 90% of what they say, they can still be correct in 10% of the things they say. So what I think is pressing it, though, is this quote by Keynes where he said, by a continuing process of inflation, government can confiscate secretly and unobserved an important part of the wealth of their citizens. Again, inflation is the process of creating more money, creating more currency units. Deflation is a decrease in currency units. That's what we're in right now because of the coronavirus depression that has been caused by the overreaction by the world's governments to shutting the world economies down. So in contrast to that, or what the governments are trying to do, along with the central banks, is re-liquefy the system, create currency units, create inflation. Now, when they do this, how do they confiscate wealth? Well, it's very simple. As I've stated before, let's say, for example, that you're trying to produce a product. You can't just go into your office and create currency units and pay for the raw materials for the product that you're trying to manufacture. If you need copper or tin or iron ore or whatever you need, you have to pay for it with whatever legal tender or trade mechanism, a medium of exchange is available. And for commodities, that's mostly the US dollar. Now, the government and the central bank doesn't have to do that. What they can do is just create currency units out of thin air and buy real goods with it. Okay? That's how they confiscate wealth. Okay? That's how they can get real things by just counterfeiting and creating currency units. That's inflation, creating currency units out of thin air. So that's what we're talking about. And I keep trying to re-emphasize this because that's what's going on. We're in very, very precarious and dangerous waters right now with what these central banks and these governments are doing. And I'm going to get into it in the reality check. I want to review the news. This is a weekly news program outside the mainstream and editorial content. Again, I'm one man with an opinion. Some people agree with it, some people don't. Some people like what I have to say, some people don't. It's each to their own. I learned that a long time ago when I was involved in some politics. Half the people are going to disagree with whatever you say. So be it. I'm not here to please anybody. I'm here to put out the way that I think about things and get my thoughts out there. I don't hide behind any type of monikers or any type of pseudonyms. I'm an open book. Am I always right? No, but I'm never in doubt. Another 6.6 million people applied for jobless benefits this week. And they revised up, the federal government did, they revised up last week's all-time high to 6.86 million. So now in the first 3 weeks of this shut down the United States economy, we have 17 million people that are jobless. 17 million people. We're in a depression. And I define a depression as a situation where most people's standard of living goes down. And that's what we're going to have. And so what do we see? I mean, anybody that's listening to this that's got laid off or lost their job, there's plenty of oil field people. I've seen all kinds of people on LinkedIn this week laid off left and right from the oil field out in the Permian and different other places. They thought they had a career. That's over with for the time being. Okay, if they didn't put any savings back, what are they living off of? Have you got your $1,200? Have you got your unemployment? I've read articles. I'm fortunate. I feel blessed because I have savings and I have a job for right now. I have health care benefits still. I feel grateful for that. I don't take that for granted. That's going to change. A lot of things are going to change. But 17 million people are jobless right now. Now, the one thing I did see is Governor Abbott here in Texas, we're going to move to a phased reopening of the Texas economy. I don't really know exactly how it's going to take place, but, they finally said enough is enough. I mean, Texas is the 11th largest economy in the world, if it was its own country. So this has to stop at some point because the repercussions of shutting everything down, as I've said for the last several weeks, are going to be greater and are greater than people dying of this coronavirus. It's just that simple. I can find article after article about suicide hotlines going up, wife beating, child abuse, the whole thing. I've seen the articles. I've been looking for them. It's not confirmation bias. It's already being reported. And some people are finding out they really don't like their families now that they've been locked up with them for 3 weeks straight. People decide they don't want to be married anymore. They realize that they have nothing in common with the person they're married to. They didn't have to see them most of the time because they were at work. But does anybody have an idea when this is going to end? What are people planning on doing? Like I said before, most people in this country, or plurality at least, 40, 50%, live hand to mouth. They have no savings. What's going to happen? And as this thing goes on, things start breaking down. The teeth on some of the gears start coming loose because businesses start going out of business. Things are starting to atrophy in the economy. And certain things in demand didn't go down. People still have to eat. Electricity still has to get produced. Certain chemicals have to be produced so that you can have clean water. There's all these little things that enable civilization that no one thinks about. We're just all going to sit around and we're going to get a check from the government. I mean, I hope people aren't that simplistic in their thinking, but I suspect that there are quite a few that are. I've heard estimates of anywhere from the Federal Reserve expanding their balance sheet, now just cracked $6 trillion this last week. That gets reported every week. You can go on the St. Louis Fed website, the Fred section of the St. Louis Fed, where they keep all the economic data, and you can look it up, Fed balance sheet, type it in, St. Louis Fred into Google, and then put, not Fed, Fred, St. Louis Fred, and then put Fed balance sheet, and it'll pop up. They update it every week. I suspect that's going to change too when it gets to a certain level. They will stop reporting it probably. Why is this important? Well, people are suffering out there. Businesses are closing, but Wall Street's doing fine as usual. The Fed came up with another SPV to bail out hedge funds and private equity that were holding BBB debt. We've talked about that before if you're a long-time listener. One of the things that I thought would be a catalyst to the end of the debt cycle before the coronavirus was the fact that the over-indebtedness of so many corporations in this country, the hundreds of billions of dollars of debt that was being called just above junk, BBB, which still gave it investment grade. Moody's, Standard & Poor's didn't want to downgrade that debt and call it junk because then it can't be held by institutions and you would have had a rout in the bond market. Okay? So I have an article here that I found or was reading, and lo and behold, you are standing in line at the unemployment office to get your $500 a week stipend or whatever, so you can survive, hopefully, on beans, rice, and chicken thighs. And the private equity firms and hedge funds that were holding all this garbage debt are going to get bailed out. Here's a quote from the article. The central bank astounded markets on Thursday when it announced a historic move to buy risky corporate debt as part of a larger $2.3 trillion rescue package for businesses and municipalities hit hardest by the coronavirus pandemic. Oh, really? What businesses? They're not bailing out my ice cream business in California that employed 10 people. But the hedge funds that were holding all this garbage debt that by these zombie companies, they're going to get bailed out. And I'm going to show you the chart. This was what I thought was going to happen originally, was that this debt was going to eventually get downgraded. There was no liquidity in these bond funds, and we were going to have a credit event in this country. And that was going to be the shock that put us into, the next economic crisis. Well, the coronavirus short-circuited all that. That just put us into a depression. That's probably going to be worse. That's probably going to lead to the eventual fourth turning and a realignment of this entire world. But that's a whole nother discussion. So under the newly expanded Fed program, the Fed will now buy what many pension funds will not, speculative grade corporate bonds. Or as they said in the article, this is not my words, junk. So while you're struggling to survive and wondering how you're going to pay your bills and how you're going to stretch that $500 a week unemployment check, or $400 or $300, depending on what state you live in, so how many beans and packets of rice and chicken thighs you can buy, don't worry, because the hedge funds and private equity firms that were holding all this trash, they're going to get bailed out by the Fed. The Fed's going to go in there. Now, people were arguing with me in the comment sections. This is what I mean when I say that the Fed has been co-opted by the Treasury. They've amalgamated like Brundlefly in the movie The Fly. Okay, this grotesque creature that of two of the worst of the Fed and the Treasury, with all kinds of Goldman Sachs stooges and former Wall Street hacks, has now banded together to make sure that they get paid. So the Fed's balance sheet is on a rocket ship, go ahead and past $6 trillion, on its way to God only knows where. And the first thing they did, make sure that we buy all the junk corporate debt that's one level above junk, and get out in front of everybody and say, if we don't do that, the credit markets will freeze up. Yeah, and all your Wall Street buddies will be tits up. Not a conspiracy theory. This is what's going on. The American people get crapped out again. Oh, next. Sucker. But, I'll get all the comments about, haranguing the, why don't I get on board with the Trump administration? Look, haven't you figured this out yet? Nobody in these politicians, if you worked for Goldman Sachs for 15 years and you're running the Treasury, do you care about what's going on in Peoria, Illinois, on Main Street? You're going to bail out your boys. That's what they're doing. Wake up. Eventually, I think, the Fed was precluded from doing all this. They're not allowed by law to do this. They've circumvented the law because of the panic everybody's in Congress and everywhere else. And they created these special purpose vehicles being administrated by BlackRock. This is not a conspiracy. You can look it up. It's right on the front page of the New York Times. You can read it. It's in Business Insider, Fortune, Forbes. They're not even trying to hide it. They don't give a shit what you think. They're going to do what they want to do. They're going to make sure they take care of their own. As George Carlin said, and I've said this many times on many videos, it's a big club and you're not in it. Now, this is the chart that, if you've been with me a while and listening to me, that I was going to use to take advantage when the credit markets exploded. And this is the ProShares Short High Yield Fund. Now, people have been emailing me about this because there are people that have been listening with me for a while. And they said, John, is it time to get into SJB? Because, their thinking was correct. Hey, we're going into a depression. All these zombie companies, all these BBB rated high yield junk, they ain't going to be able to make their interest payments. They're going to have to fold up. And that's what started to happen. This thing started taking off in the end of February. People were starting to go long this because they were anticipating the defaults. And this thing, remember, this is a short fund. That means you're shorting this bond market. And why did we want to short junk debt? Because you can't trade bonds like you trade stocks. When the liquidity gets sucked out of the bond market, these things go bang down a lot. No bid. That means no one wants them. Okay? That's why we thought we would get a tremendous move, and we started to get a tremendous move. This thing was breaking out massively. Look at it. Look at the volume. People were getting on this. They're like, here we go. Here come the defaults. We're in a depression. Well, the Fed stepped up. They front ran this, and this thing went right back down. It's like there never was a problem. Why? Because they're going to step in and buy all these bonds. Don't fight the Fed. The Fed's going to backstop it. They're going to come in and buy all that junk debt. So this whole idea just blew up in anybody's face. That's why I even said this a few weeks ago. We were talking about this. John, is it time to get to SJB? Forget about it. The Fed's going to backstop all of this. The Fed's going to end up buying stocks. Before they're going to be buying old junk cars. They're going to be buying baseball cards. I don't know, everything. Of course I'm being facetious, but that's what they're basically doing now. They're just buying the kitchen sink. They're panicking. You don't live in a free market capitalist system. You live in a National Socialist without the racial connotation of the Third Reich. You have an extreme amount of nationalism, okay, which I'm not really against, I guess. It's going to be increasing now because everybody's going to pull their horns in. Look at what's going on with China. We've seen legislation being put forth by various legislators about China needs to pay reparations for what they've done. I mean, this could get really ugly. And then the socialism parts come in corporate socialism. The amalgamation of big government and big corporations. They're going to take care of their own. Now, yeah, they're going to throw you a little bone, your little $1,200 check, and you get your unemployment, and you'll be able to, subsist, like I said, on beans, rice, and chicken thighs, and powdered milk, I guess. But, you're not going to have any future. Now, this will eventually pass, I guess, but what's the outcome of this? If they can just come in here and do this, there's no cleansing of the system. Again, here we go. We're just going to print money. No one asked the question. I've said this 3 weeks in a row. No one asked the question, where does the Fed get the money to do this? They don't have any money. They create it out of thin air. They just create it out of thin air. That's inflation. That's how they rob you of your wealth. That's why wages for working people haven't gone up in 35 years in this country. That's why the middle class is falling apart. Couple that with the masters of the universe, your corporate class, have shipped all the jobs overseas from small town America, all those manufacturing towns in Muncie, Indiana, Peoria, and Youngstown. They were gone a long time ago. So the good thing from this may be that this turns around and we bring all that back, but I don't know. But that's what you're seeing, okay? It's the amalgamation of big corporations and big government into a national socialist type situation. And don't write me and say that Nazi. I'm not talking about with a racial connotation. What I'm talking about is nationalism coupled with socialism, pulling their horns in, America first, that kind of stuff, and corporate socialism. They're already talking about, Kudlow was talking about putting a fund together of more created money, evidently, to help manufacturers bring jobs back here. I mean, this is where we're heading. Frank Holmes over at U.S. Global Investors, top-notch, I believe, one of the ETFs he has over there, Go AU Gold ETF that mostly has a quant type focus, which they don't just buy like market cap weighted gold stocks. They get the best performing, most profitable gold stocks, which puts them mostly in royalties, but that's a whole other discussion. Anyways, he has really good commentary over there. And his commentary this week was really great, I thought. And I thought I would share it with you because it's kind of what I've been saying, but I really liked his analogy he used here, or metaphor. He said excess money is like Miracle-Gro for gold. Miracle-Gro, obviously, everybody knows the plant fertilizer that you put on your tomato plants. But this is a quote from the article. I'll put a link to it. According to Evercore's ISI Ed Hyman, as many as 285 stimulus measures have been announced around the world in the past 8 months. Now, I'll say that in the 8 months because remember, this was going on before we even had this thing. Remember, we were already at record low interest rates around the world. Central banks were already massively cutting. I was already calling for a commodity bull market and a resource bull market before, and higher gold prices, just based on the fact that I follow weekly central bank activities, and central banks around the world were already massively cutting rates before this crisis. The quote goes on, the most ever by a wide margin. I think we talked about this last week. Japan, which only this week declared a state of emergency, approved a $1 trillion relief package on Tuesday. Japan is the most indebted country in the world. I think their debt to GDP is over 300%. So where are they getting the $1 trillion from? Of course, they're just going to create it out of thin air. quote goes on, the U.S. economy is being flooded with excess money and liquidity right now. Compared to the same period a year ago, M2 money supply, which includes not just cash but also savings, deposits, money market funds, and other near money, this is high-powered money, by the way, has increased some 12%, the most in more than 10 years. Well, 10 years ago, guess what we were in the middle of? A gold bull market. And Mr. Holmes puts a chart up, which I thought was good. So the gold line obviously is gold prices, which you can see over here. Here's the time frame. This is when gold made its last high around 1900. And notice what money supply was doing. It was going up, coming out of the 2008 great financial crisis. So we're going to do it again. But now, every time you do this, every time you print money to get out of the previous crisis or the current crisis, all subsequent crises require even more money. So how high is the gold price going to go? And of course, I'm going to have the people commenting and emailing me about, I don't know what I'm talking about because the gold price is relative depending on what currency. I know that. You don't buy gold to get wealthy. You buy gold to preserve wealth. Okay? To preserve purchasing power. At some point, after they collapse whatever currency, whatever country you're living in, if you have gold, you've preserved your wealth. You know, basically, you've heard the old adage. You can basically, an ounce of gold will buy you a good set of clothes or a good suit in Roman times or nowadays. That's kind of what the analogy, or a basket of goods, if you will, can basically cost roughly the same in gold because it preserves purchasing power, because it cannot be inflated away by governments and by central bankers, as I've said many times before, and everybody still poo-poos it. What are you talking about gold? How you make wealth, how you get wealthier is you speculate in gold mining stocks. Why? Because they go up many times more than the gold price. They have leverage to the gold price. But you have to speculate. You have to be correct in your selections. You have to understand things. And why do I think this is a perfect time for gold stocks? They've been lagging. I don't know why, but they're not going to continue to lag if the gold price keeps moving up, which I suggest it will do. It will make new highs probably by the end of the year. I mean, this is going to be crazy what's going on. We don't know how much money they're going to print. We don't know how many of these special purpose vehicles they're going to institute. But, you know, when somebody's buying those junk bonds from those institutions, what do you think they're doing with the cash? They're not putting it in a money market fund or in T-bills at 0.1%. They're speculating, they're levering up. They can lever that money up 5 or 10 times in the gold market, in the stock market. That's why I've said you're probably going to see all-time highs in the stock market if they keep printing, regardless if the economy's collapsing. That's what happens in an inflationary economy. Look at what happened in Zimbabwe and Venezuela. The Venezuelan stock market made all-time highs because they were just printing money. And people will flock to any real assets. Once the inflationary mindset sets in, which it will, eventually, even to the most dense American, that these people are just going to print ad infinitum. I mean, what's the deficit going to be this year? I've seen projections of $2.5 trillion just on the deficit. And everybody's justified in going along because we're on a war footing. It's like World War II. What's going to be the repercussions of all this? You know, I'm not going to change it. It doesn't matter if I think it's right, if I think it's prudent. What matters is what's going to happen. What have they said they're going to do, and what are going to be the repercussions based on the historical narrative? And the historical narrative, as you can see, is if they blast the money supply off, the gold price goes up too. I mean, look at it. Okay, this is only a 10-year sample. But we saw this before in the last great financial crisis. Money supply was pushed up, 10% growth, year-over-year change. What happened? Boom, the gold price follows. It basically had a little bump here, it followed. Okay? Gold stocks are lagging. Look at the leverage they have to the gold price now. Your costs are going down because 25 to 30% of your costs in a gold mine is energy, running all those excavators, haul trucks. That's all diesel. You're at $22 a barrel West Texas Intermediate. I mean, I'm driving every day past these truck stops on the way to the job site, and the diesel and gas prices are going down every day. All that savings goes right to the bottom line. on these miners. That's why they'll go up 3 to 5 times more than the gold price. And some of them will go up 10 or 20 times. Now you ask me which ones, I don't know. I recommend people stick with the royalty companies. There's a whole bunch of them. Or you just go and take a look at that U.S. Global Investors ETF that is quant-based and will keep you mostly in royalty companies. Will you become a millionaire off a $10,000 investment? No, you will not. But you will do quite well in a gold bull market. And I think that if you can't, you have to have exposure to this. If you don't own physical metals, which I've been advocating forever as an insurance policy, like you have fire insurance and auto insurance, you have those, so if you get in an accident in your car, you're covered. If your house burns down, you're covered. Why do you own precious metals in physical form? It protects you against government and central bank malfeasance. Exactly what I've been talking about for the last year and a half on this channel. And not everybody, excuse me, I shouldn't say that. A lot of people scoffed and poo-poo. We're not going to be scoffing and poo-pooing now. Because if you had saved some of your wealth in the gold, you've been protected. You have savings then. You can go down to the coin. You can throw that coin up on eBay and get $1,800 for that Krugerrand today. That could $1,800, man. You can live a month off that, a couple months probably if you stretch it. But you didn't do that. Most people didn't do it. Now try to go out and buy it. You know, they personal finance. They advocated have 6 months of savings. Do most people have it? No. Everybody's walking around with a Starbucks and the latest whatever phone. So I don't want to get into that. That's just that's blaming the victim, they say. But I'm telling you what's going to happen if history is any clue. And your government and your Federal Reserve, these central banks, these sociopathic criminal central banks, have turned everybody in. Forget investing. That's over with. Tell your Edward Jones advisor to stick it in his ass. Everybody's a speculator now. There is no set and forget portfolio. I just showed you the chart of the balance sheet of the Fed going through the roof. Okay? They've increased their balance sheet by $2 trillion in 2 weeks. It's up 50%. What do you think is going to happen when they buy all this junk from these private equity hedge funds and banks? They don't just sit on it. It's high-powered money. Let's talk about the OPEC so-called deal. Basically amounts to a fart in the wind. Let's go over this again so people understand what we're talking about. Pre-coronavirus shutdown, the world was consuming 100 million barrels of oil per day. So, we have the coronavirus, whether you agree with it or not, whether you think it's prudent or not, we've shut down basically a large portion of the world's economy. So that means oil demand has decreased anywhere from 10 to 25. I've seen upwards of 30 million barrels a day right now. So every day, we've got to find some place to put 20 to 30 million barrels of oil. Well, we have onshore storage, but it's rapidly filling up. So that's why people have been, or trading companies, there's trading companies out there that actually know what they're doing, staffed with very smart people that know exactly what they're doing, and they are leasing tankers and putting the oil in the tankers. Even President Trump talked about it this week. So the pressure's on to get OPEC and the Saudis to come off the ledge back inside and have a cut, 10 million barrels per day. Well, even if you got them to agree to it, which I guess they kind of did, but Mexico's still holding out. I'm not sure exactly what's going on there. We're going to have to follow the news over the next couple of days. They're not just going to turn off 10 million barrels of production tomorrow. And like I said before, you don't know. So 30 million barrels, let's just say it's 20 million barrels. That's 600 million barrels a month of excess production. Where are you putting it? And we're having more and more shutdowns around the world. So when do we turn the world economy back on? And when we do turn it on, it's not going to just come back the next day like a light switch. It's going to take time for demand to ramp up, even if it does. So where do you put the crude oil? Well, you put it on tankers. And, you know, the Contango, which we've talked about before, is still pretty steep. And yes, these tanker stocks have not really taken off like we thought, but they're still minting money. I mean, like I said last week, I mean, the Euronav CEO said that he's going to earn his entire market cap this year, or maybe in a couple quarters. So we're seeing share buybacks being instituted, dividend increases, paying down debt. These all make you wealthier as a shareholder in these stocks. Now, the problem why they haven't moved, people say, well, why haven't they moved? Because people don't think this is going to last. I got news for you. We're in a depression. It's going to take a long time to get out of this. And you can't, and oil production is going to come down. I can promise you that. It's going to come down because people are going to go bankrupt, and there's not going to be any investment in any new production or upkeep in existing facilities because there's not going to be any cash to do it. So you will get natural decline, but it won't be as quick as the demand destruction is. And yet that crude keeps flowing. Every day I got to find somewhere to put 10 to 20 million barrels of crude. Well, that's anywhere from 5 to 10 VLCCs right there taken out of the fleet. So what are they doing? They're taking these old rust buckets at the end of their life. Some of these tankers are 15, 18 years old, and they're just storing crude on them. They were getting ready to get sent to Bangladesh to the ship breakers. And now they're pulling down, 80, 100 grand a day or more just to sit there and store crude, just run the generators on the ship. Not a problem. What are the operating costs? 20 grand a day, so your margin's $80,000 a day or more. Yeah, that's going to translate into some serious cash flow. And like I said, how long does this go on for? 3, 6 months? I don't know. And then people say, well, after the Contango goes away and after we turn the economy back on, it's going to collapse. Yeah, but we're not building any new tankers. And all those ones that need to go to the shipbreaker, we still got IMO 2020. So if you don't have, this all comes back into play. Plus we have IMO 2030. We've all forgotten about that, but that's still in play. So I think we're in a shipping bull market. You're going to have ups and downs. It's very volatile. If you don't understand Contango, if you don't understand what's driving the tanker rates, if you don't understand IMO 2020 and 2030, then stay away from it. Don't just do it because I'm doing it or Cuppy's doing it. If you don't understand what's going on, and if you can't get your head wrapped around it, or the volatility makes you sick, then don't get involved. There's other pitches coming across the plate. Uranium, gold. Those are easier to understand for some people. You can't kiss all the girls. So don't feel like, I'm missing out, fear of missing out. There's always another pitch coming across the plate. There'll always be another pitch. And some of the stuff, some people just can't get their head wrapped around it, or they can't take the volatility. What do I think is going to happen? Well, it doesn't really matter if they have their cuts or not, because low prices, there's article after article. Go on Google and you can, Continental Resources, they're shutting in production. Capital spending by Exxon being slashed. All the big companies slashing exploration budgets. Remember, I've talked about this before. This is an extractive industry. If you're not constantly reinvesting to find additional reserves for the reserves you pump out of the ground, eventually you go out of business. So what happens in 2 or 3 years when we've had this huge gap and no investment in oil and gas, and eventually demand does eventually come back? Because this isn't going to end the world. The world's not going to end. Eventually we're going to come out of this, and the economies of the world will start recovering again, presumably. But the supply won't be there then. And you can't just turn supply back on, just like you can't shut demand right off. Or you can't let me rephrase that. You can't turn supply back on, just like you can't turn it right off. If you go through depletion, you haven't done any investment, or you don't do the required maintenance, then you won't be able to ramp it up. And what's going to be even worse is now because of these low prices, we already had a depression in oil services going on. Now we're going to force even more of these companies into receivership. More companies are going to go bankrupt. When they do want to ramp this thing back up and start having to re-explore and frack and do all these things, where are the services going to be? Where's the equipment going to be? Where are the crews going to be? Because they're laying people off left and right, and people don't just sit around in Midland or in Dulac, Louisiana, waiting 2 or 3 years for the industry to recover. They go off and find other jobs. So you're going to be able to catch this thing both ways. Tankers, you can take advantage now, and then this thing's going to swing back in the other way in the pendulum when demand does come back in a couple years, and you're not going to have enough supply. Then you're going to have a supply deficit. Then when the capital spending needs to happen, it won't happen fast enough, and there won't be any offshore drilling rigs. There won't be the requisite amount of geophysical technicians. There won't be enough wiremen or mud guys, because it's all like muscles that don't get exercised. They atrophy. Now, you throw enough money at it, it'll come back, but it won't come back instantaneously. So what I'm saying is the survivors of this depression in the oil patch are going to be tremendous winners down the road. Now, I've said that before. We got double clutched on this thing because of the coronavirus. The recovery wasn't in place. We got double clutched on it, but I'm not, I'm going to be back into this thing in a couple years, or maybe in 18 months. I don't know, or a year. Well, we'll watch it. But if to supply the world with 100 million barrels of oil a day requires hundreds of billions of dollars of investment a year just to maintain production, and it ain't happening, and it hasn't happened for a while, and it's going to be cumulative, and eventually it's going to be a problem, and that's an opportunity. Here's the close on Friday for oil. I mean, this is forward futures contracts off the CME. Spot oil WTI is about 22.70, I think. So if you just go out to September, you've got $11 in Contango. So you still have a very steep Contango. This is very good for tankers because, again, what do? You buy 2 million barrels of oil at $22.70, and you immediately sell forward a contract at, August at 33. That's an immediate $22 million, and then you just have to pay for the storage. So whatever, you just go lease a old junky 18-year-old VLCC and let it sit off, out in a bay somewhere holding the crude. Now you're going to give up a lot of that $22 million in storage costs, but it's risk-free. You've bought the crude and paid for it at 22. You've immediately sold it forward at whatever, and you just have to deliver it on the delivery date. Really, the only risk is that they don't take delivery. But I think by August or September, we should be coming out of this thing. If we're not by then we got bigger problems. So that's what I'm trying to tell you. You got to really watch the Contango and make sure it's not shrinking. Does anybody really think that OPEC, you're going to have movement up and down. That's where you're going to get your volatility. Trump's tweets, he's talking about putting a tariff on Saudi oil, and the markets react to this stuff. But what's Occam's razor? What's the most obvious outcome? Most obvious outcome is that whatever deal they get, they're not going to adhere to anyways. All right, last but not least, uranium. Basically the whole uranium industry now has got their minds on care and maintenance. Cigar Lake, Cameco shut it down for 4 weeks. There's no way that's not staying closed for longer. This is, to me, kind of like I don't know. Kazakhstan declared that COVID-19, that their mining operations were going to stop, Kazatomprom. So now you take the already big supply deficit that was already out there, and you've now brought it to a head. Is this the catalyst that finally gets the uranium market moving higher, that wakes up the utility buyers and they say, wait a minute, I've got to get out there and start buying and getting my fuel, because like we've said before, 18 months to get, a year, 18 months, 2 years to get from mine to fabrication to installation in the reactor. So I would suggest there's a lot of good podcasts, Uranium Insider, a lot of good people smarter than me talking about this. I'm going to deep dive this in the next week. But, we're this thing on this Kazakhstan news just shot right up. When we've seen, a $30 on the ask for uranium. So if we bust through 30, then that should be the catalyst that starts drawing more attention to this market. So I've went on now for 40 minutes. This is longer than usual, but a lot of stuff is happening. I had a lot more information. I might have to go to 2 videos a week. I don't know. There's so much happening so quickly that this I could have went on for an hour or more talking about stuff. But that's it for this week, guys. Stay safe out there. Stay on your feet. You got to be nimble. Like I said, everyone's a speculator now. You can't just sit and forget. You got to be paying attention to what's going on. And for heaven's sakes, understand what you own and why you own it. All right, we'll talk to you next week.